Hey, that's Alphacharts with a state of the market video. Today is March 9th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of equities mentioned. Know your time frame and risk tolerance. All right, thank you all very much for watching the video. If you haven't done so, please like and subscribe to my YouTube channel and follow me on X at Alphacharts365. Again, I do run a subscriber group. If you want way more information from me about how I look at the markets, you get all of this plus so much more. Consider a subscription at Alphacharts365. Again, it costs $10 a month, but you get an immense amount of again market information, and basically it's the same type of information you get from a very expensive subscription, but I only charge $10 a month, so I make it affordable for everybody. Okay, it's like having a co-pilot. Also, if you're working full time, it's a great way just to supplement what you're seeing in the market. Let's go with spiders here, SPY, and we are still in this channel. Um, Things are getting a little bumpy in here. We had two big down days this week, 3 days down altogether. But we're still above the 9-day EMA. We're still above a rising 23-day EMA, 50-day, 200-day SMA. So my point is that yes, maybe a little caution because of this type of clustering, but we had something similar enough back in here, and kind of maybe a little bit of it similar enough back in here. And so right now we're not to the point where I'm willing to say um things are, falling apart. It's quite contrary. We're still in trend. Now, if we start to break this 503.64, the 23-day, and come out of trend, out of this lines I drew, that could change my mind, right? That would be more of a dangerous situation, I think. But nothing wrong with what what maybe isn't working or slow to work or stuff like that, and just seeing what happens. On the week, down 0.21, RSP, it was up. It was up. So this is something that's actually really nice to see if it continues, is that RSP outperformed the SPX. And again, my feelings about large cap tech. I'm not going to go into that today, but that definitely had to be the underperformer for the week, right? But RSP, the equal weighted, is breaking out from a large base. If it holds this breakout, and here's the daily, if it holds the breakout, I think that it's just about rotation more than it is anything else, with the market potentially going down. But yeah, I want to definitely see it hold this breakout. It's a very big area in RSP. Qs got hit real hard on Friday. Again, still in trend, but not quite as strong as S&P. Get a higher technology sector weighting, right? It's almost all technology. This 434, 435 area, that's what I'm watching, right? As long as we're above that area on the trend line, I have no problem with this. It's when this area breaks, then it's 424 and then potentially 400, right? Looking at the week, down 1.5%, pretty significant week, right? Going down, and then equal weighted was down 1%. So equal weighted again did a little bit better, but technology in general and the NASDAQ in general, not so good. Now, of course, listen, here's a little cup and handle. Maybe it just got a little extended. It's right into a supply area. We've talked about this supply area now multiple times. Maybe it just needs a little rest, right? That's it, maybe. And then it couldn't break out and move higher. So, this is not like doomer, let's get completely bearish type of talk, but this is like, hey, this may need a little rest, a little sideways movement, and then we'll see from there. Mid caps. Nice breakout, 1.47 on the mid caps. Remember, these are mostly equal weighted index as well. As long as it's above, again, this breakout area, which is pretty significant, 530-ish or so. Um, we could be long mid caps, right? Again, this is an area where we can see a lot of growth is in the mid caps. And it moved quite higher. And then let's look at IWM. And it pulled back only basically even on Friday. So you saw that the Qs did, and IWM barely moved, right? As far as on a closing basis, it broke out of this big range, and it's still moving higher. Good chance we see, this 235-ish area. Looking at the weekly, let's see how to do on the week. 0.43. So mid caps are the big winners for the week, I think, right? Really. And so that's a place where I think we should be, putting some extra attention, right? This tells us mid caps is where, the money put some attention. But IWM still looks pretty good and green on the week as well. Let's look at financials. Financials were coming up to an area of supply. They continue to kind of just trend higher, but this is an area of potential supply, right? So we just have to be careful for that. Does it mean it ends there? We don't know beforehand, but we know that there's a chance that it could get at least a little wide and loose in this area. On the week, it was up 0.84. So again, strong week for financials. That's good for the overall market. Looking at SMH. Nvidia got hit pretty hard, but it was still up 2% on the week. Pretty crazy. This was a fib extension, this 237.65, and you see it touched it, exceeded just by a bit, and then it pulled right back. Does it remain to be significant? We don't know, but that was a potential target, 1.68 from this big cup and handle. Doesn't mean it ends there, but it does mean that's a significant point potentially. Now, XSD is the equal weighted, and you see it also had a big reversal on Friday. It did break out of this area, and I should stay breaking out. Yeah, it did. It broke out and it kind of stayed, did move higher by 0.38, but not the kind of price action that you really like. And we'll see if it falls back in. That'd be a very negative outcome for that. Let's go right here to transports is equal weighted transports. On the week, it was basically flat. And you can see how it's trying to break out of a base. And then let's go to daily. And, one thing that it does have on it is high, lower high, potentially lower high. But then it has higher lows as well, because maybe you call this a lower low right there. So it's got some mixed readings, is my point for the equal weighted transports. I think IYT had a split. So you're seeing this kind of weird data. So we're going to just skip on that. And then home builders, negative 0.73 on the day. On the week, they were up basically 0.19. So not much, but it was still positive price action. And then I like to look at XHB as well. And about the same. Again, things just, still in trend, still above all the moving averages. So, yes, there's some caution that says, okay, we have a little bit of clustering of distribution, but on the other hand, we haven't broken any trends yet. So, this is not like a go all to cash moment, in my opinion. But again, it's kind of reduce some risk if you can, right? Let's look at the internals. Every time the VIX comes to the trend line, we get a little pop in VIX, volatility. You see it makes a higher high each time. We haven't quite done that yet. We'll see if that part continues, but it does have this broadening formation that continues. Then that's, something to watch. Something to watch. Credit spreads. Moving a little higher as well. Still relatively low when you look at the big picture. So I'm not too worried about it. If it gets above 1.52, that's a different story. But as of right now, I'm not too concerned about credit spreads. It's not even made a higher high, really, relative to any of this right over here. If we see something that looks like this, or like this, or like this, then that would change my story. Even like this, right? I would get much more cautious in a situation like this, but we don't have that at all. It looks nothing like it. So I'm not worried about it. Percent of stocks above the 50-day. Now, here's the interesting part, right? We saw what the indexes did, but breadth actually improved slightly on this chart, right? So it just shows you how broad based, we saw the equal weighted, we saw the mid caps, we even see the small caps. They're all positive on the week. And right here, percent of stocks above the 50-day, that shows you that it's a very, it's the large cap tech, I really think, that's causing a lot of the damage, and tech in general, a lot of damage in the market. But outside of that area, we're still seeing some real positive price action. And that's also the reason why I'm saying there's no reason to fire sale everything. But if you're heavy in software, heavy maybe in semiconductors, heavy in other tech names, whether it's Apple or whatever, you may want to evaluate where you're at. What else do we have here? Put call ratio. Yeah, it's a little bit lower, but nothing extreme. So nothing that I'm interested in. The dollar. The dollar is, you know, just kind of waterfalling. I could see it, it moved quite a bit in 3 days, about 1%. And so now you can see it kind of maybe consolidate a little bit, which it likes to do. I could definitely see a consolidation here. And I wouldn't be shocked if we see it one more leg down into this 100-ish area. Again, this is bullish overall for the market. This is not bearish. So, in my opinion, this is a good thing. And we're going to hopefully see, positive price action again out of those, at very least, mid caps, some of the equal weighted S&P, some of those names. But again, I like the mid caps personally. And then let's just look at TNX. And you see, bonds are moving higher and rates are falling. Again, good for those small mid caps as well. So if we see this trend continues, then again, we have a positive, outcome, hopefully, for the market in that shape, in that respect. All right, so just going back to SPY real fast, and we'll clean this up. We're still in trend. I think, there are some cautionary pieces in here. Think outside the box. If you're still stuck in, I only want to buy technology. I've talked about why technology may underperform the market this year. Doesn't mean technology is going to crash. It just means it's going to underperform. I mean, SPY and other areas of the market are going to perform potentially better, right, than technology. And I think we're seeing that in real time. So thank you all for watching. If you haven't done so, follow me on X, like and subscribe, and on my YouTube channel. And if you really like the stuff, Alphacharts 365, check me out there. Okay. Hope you all are having a great day. Take care.